Hey everybody, Smart Silver Stacker here. Hope you're doing well. Yesterday, the Saudi Arabian Minister of Finance, Mohammed Al-Jadaan, told Bloomberg interviewers at Davos that Saudi Arabia is open to settling payments for Saudi oil exports in currencies other than the US dollar. Now, you might think that this is just some more speculation. After all, this is not the first time that we've heard this kind of talk from the kingdom, but there are several factors at play now that indicate that we are getting very close to the day that this turns from talk into action. And if that happens, it will be a game changer that poses a major threat to the value of the US dollar and even to its status as the world's reserve currency. And if you think that this is information that is worth sharing, please do give this video a like and a subscribe. And also consider checking out today's video sponsor, sdbullion.com, with the link down in the description. So let's take a look at what exactly the Saudi finance minister said in that interview. Quote, "There are no issues with discussing how we settle our trade arrangements, whether it is in the US dollar, whether it is the euro, whether it is the Saudi rial. I don't think that we are waving away or ruling out any discussion that will help improve the trade around the world." Now, it is interesting that he did not mention the Chinese yuan in that list of currencies, but listen to the next quote from the interview. Quote, "We enjoy a very strategic relationship with China, and we enjoy that same strategic relationship with other nations, including the US, and we want to develop that with Europe and other countries who are willing and able to work with us." Now, this is a bit of a change from the status quo. For the past 5 decades or so of the Petrodollar arrangement, Saudi Arabia's primary strategic partner has been the United States. But clearly, the sands are shifting, and Saudi Arabia is positioning itself for a newly multipolar global power structure. And it's not hard to understand why. Saudi Arabia derives roughly 80% of its revenue from oil exports, but the leadership there understands that those hydrocarbon reserves, they're not inexhaustible, nor will demand for fossil fuels be sufficient to fill Saudi state coffers in perpetuity. According to the report, Economic Diversification in the Gulf, Time to Redouble Efforts, published by the Brookings Institute in 2021, revenues from oil are expected to decline in the face of reductions in global demand starting around 2040, if not sooner. And this has been a major motivator for Saudi Arabia to make plans to diversify their economy, as well as their international partnerships. And diversify they have. On the economic front, with their Vision 2030 program designed to boost non-oil GDP growth, and in the international arena by signing a strategic partnership with China at the end of 2022, and also applying to join the BRICS Organization of Nations. And that last bit about Saudi Arabia joining BRICS, that's what we really need to be on the lookout for here, because it may be on its way very soon. The 2023 BRICS Summit will be held later this year in South Africa, whose foreign minister recently indicated that this is a year when BRICS expansion will be a focus of the agenda. And if Saudi Arabia does join BRICS, or BRICS Plus, or whatever they end up calling it, then in short order, we could witness the development of bilateral currency exchange arrangements between BRICS partners, in which they no longer need to pay for their oil in dollars. The Saudi finance minister basically just told us as much in that recent Bloomberg interview. India and China are the number 2 and number 3 consumers of petroleum globally, exceeded only by the US. So if they begin paying for their oil in rupees or yuan, or who knows, maybe even something like the gold-backed stablecoin that Russia and BRICS hopeful Iran recently announced, that will be a major blow to the dollar. And as other OPEC members follow Saudi Arabia's lead, the de-dollarization process would also likely extend beyond just Saudi exports and begin to affect energy transactions worldwide. Now, such an arrangement would eliminate petrodollar recycling, in which dollar-denominated oil revenues are reinvested into U.S. treasuries, and this transition would also give China a free pass to accelerate their dump of nearly $1 trillion in U.S. treasuries, an asset that they've already been divesting themselves of at a rapid pace for the past year. Ultimately, this scenario would lead to rapidly rising bond yields in the U.S., and with more than $31 trillion in debt, spiking yields means one of two things: a U.S. debt crisis and possible default, or intervention by the Federal Reserve in the form of quantitative easing, with the Fed buying treasuries in whatever quantity is necessary to bring rates down to manageable levels. And I see very little mention of this possible eventuality in the mainstream financial press. It seems that few Americans are even aware of these threats to their currency, but that's really not surprising because a concerted effort has been made to obfuscate such risks from the public. That's part of how we got into this situation in the first place. But the good news is, we do still have some time to prepare by getting into hard assets like gold and silver. Now, this isn't financial advice, I'm not a financial advisor, but one reason that I stack precious metals is as insurance against this type of risk. And I'm not saying that it's guaranteed the dollar is going to lose its reserve status anytime soon. Who knows? Maybe the government will balance the budget and get the soaring debt under control. But to be honest, that also seems like a bit of a long shot. So I am hedging my bets with some hard assets that cannot be printed and whose value doesn't depend on the Saudis continuing to sell their oil in any particular manner or currency. And while the public may remain oblivious to these threats to the existing global financial system, central banks around the world, they're definitely paying attention. And that is why they have been purchasing gold at the fastest pace in more than 50 years as these global developments unfold. And I think it's smart to take a page out of their books and protect ourselves in the same way. Let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.